Good morning, everyone. Today is February 10th, a Thursday. I'm Marv Eisen from Timeless Dollar. And following on the heels of yesterday, we start out with the economic calendar to see what announcements are going to move the market. Now, I'm making this after 8:30 in the morning Eastern Time. And so the important news of the day has already come out, and that is the inflation numbers, which came out higher than expected. They were expected to be high. They went through that. The consumer price index month to month was expected to go up by 0.4%. It went up 0.6%. And the CPI year to year, 7.2% was the expected number, went up 7.5%. So what does that mean? Well, that means that the stock market is driven into a tizzy because with higher expected inflation numbers, that leads to higher interest rates. That's the number right over here. And sure enough, the U.S. 10-year treasuries, remember it was down to 1.2, 1.3. Well, now it's almost 2%. Flags are red across the board. This is to be expected. When interest rates rise, that's generally not a good thing for equities. All this inflation, where does it come from? Well, I'll repeat what I said in my video yesterday. The core of inflation starts with energy. And energy has... Look, there's been no one driving for the past couple of years because everyone's been working from home. And so the oil companies have had to basically eat their oil or keep it in the ground or whatever, but they were feeling badly. So this year they're making it up. And so ExxonMobil posts highest profits. Where'd that go? Come on, come back here. Exxon posts biggest profit in 7 years on high oil prices. And that's, and one more, BP. BP posts 13 billion profit, highest in 8 years. Now remember, this is after they hid all the money on the ledgers that they could, and still these numbers pop out. So that's where your inflation comes from. They didn't sell us the oil. They didn't sell the oil last year or the year before. So now they're making it up big time. So that's what's driving inflation. Can't do anything about it. They control the oil. Oil runs the world, and that's the way it is. So let's move over to our E-mini chart. Now, this is yesterday's chart. Now, yesterday, prices rose based on on higher earnings for the FANG stocks, for the NASDAQ stocks, the technology sector. They rose up overnight. And they stayed there. The trading zone, the calculated trading zone was actually down below, was down here. The actual calculated trading zone for yesterday, based on the averages of the previous several days, was 44.58 on support and 45.26 at the resistance level. And of course, this is the previous close, but prices overnight moved up. And when that happens, as you know, for those of you who subscribe to my Trading Zone subscription service, and you really should, you transpose the zone, copy it, clone it, whatever, transpose it up to match either the high or low of the day. Wait till the market tells you. Wait till you see the likely place where prices have put in the intraday low or high, and then you could place your trade. Put your trading zone to where that would fit, and you place your trade there. Typically, the prices will track within the trading zone, and there would be no need to transpose. Nevertheless, anyway, my subscribers have the trading zone for today. I won't give it to you. Of course, stocks are all down. So the market being a sentimental creature, we'll see where the bottom is, if there is a bottom today. But we just have to be patient, as I always say. Take your time, trade safely, and remember, just because it's called day trading doesn't mean you have to trade every day. Okay, this is Marv Eisen for Timeless Dollar. Trade safely. Thanks for watching, and I'll see you in my next video.